Our key exports in Singapore in April up 12.4%, beating market expectations. It's also more than double the 5.4% growth for March. Analysts say that while tariff fears are driving greater export activity, things could get grim should higher tariffs kick in.
Singapore's non-oil domestic exports last month hit double-digit growth for the first time this year. Market observers say the spike was largely due to exporters shipping out more goods before the expected higher tariffs take effect.
The result does suggest that in the short term, a lot of the manufacturers and the importers are trying to absorb the cost of the tariff war. Singapore's non-oil domestic exports as well. They have grown at a faster rate than anticipated. So while the result is good temporarily, it could have been helped by the manufacturers and the importers.
Electronic shipments grew by 23.5% last month, boosted by items like personal computers and integrated circuits. For the second half of this year, some analysts expect the electronic sector to continue expanding.
We'll actually see some upside bias, especially if tariff de-escalation continues to occur, and this basically also means that any de-escalation might mean some improvement, in risk appetite, and that will mean, a higher trade as well as fund flows activities across ASEAN. Singapore clearly being a very strong beneficiary to increase money, volatility into the region.
Non-electronic exports also climbed in April by 9.3%, mainly due to greater demand for gold.
So we have three reasons for buying gold right now. The uncertainty factor. Number two, the fear that the US dollar will weaken. So to protect myself, I hold on to gold. And the third thing is that there could be a new alternative currency into this world, and it will be introduced by the BRICS countries. And so a lot of people, or maybe some people, think that this new currency will be like the old gold standard.
Economists are cautious on continued growth. Most are watching tariff deadlines closely and how the trade environment will evolve.
Things might still play out for the worse after the 90 days are over. Really, and over this period of time, Singapore being a price taker as well as a large exposure to global trade, will be very much impacted if tariff escalations continue to happen into the second half of this year.
Looking ahead, market watchers also expect China's slower growth to have a potential spillover effect on Singapore's exports and supply chains.